Hello everyone, welcome back to my channel. So today I want to discuss with you guys whether it will helpful to learning from those hedge fund managers as retail investors, and also what material should we take into consideration when we are trying to learning from the greatest investment minds. So it began with the read of the book Invest with a House, as the book has discussed and backtested several famous investors like Warren Buffett, Bill Ackman, and Ray Dalio to see whether copying their portfolio will help you make a profit. And it basically compares the stock market as a big poker game, where only a small portion of people can continue winning in this game and others have higher chances of losing money. And if we have identified a group of people who can continuously win in this game, that means they're doing something right, and we would probably should learn from their method or learn from their strategies. Charlie Munger has said that, "I believe in the discipline of mastering the best that other people have ever figured out. I don't believe in just sitting there and trying to dream it up all yourself. Nobody is that smart." So it means that copying the big guy's portfolio is like standing in the shoulders of the giants. So those hedge funds or big asset management company, they have enormous data like from Bloomberg that us individual customers could not access to. I also feel like those big guys, they already are very experienced in this industry. They have more data than us individual investors couldn't access to. So by looking at their portfolio change, like what Warren Buffett has just bought, can also give us insights about what is happening, and thinking about why they are doing this can also give us a hint if we are not following them 100%. I think there's several things to think about before we decided to copy the hedge fund's investment. The first one is whether the hedge fund has beat the market continuously. So for example, Warren Buffett's Berkshire Hathaway has a compound average annual return of more than 20% since 1965, which comparing with S&P 500 only have 9.9%. That shows that Berkshire Hathaway has continuously beat the market, and that implies something we can look for. And the second criteria is whether this asset management or hedge fund are long-term / value investment. If the hedge fund manager like buy the stock and sell tomorrow, even though we look at their position change from time to time, we may not see the opportunity because their filings announced every quarter. So by the time you see the filing, things may already change. So since Berkshire Hathaway has usually the investment holding for 3 to 5 years, so looking at their investment action also makes sense because that long period of time, we do have the time to learn from the portfolio and apply it to our own. As a financial institution study shows that a lot of people have been struggle between the choices like what lunch they are going to eat or what car are they are going to buy, rather than what stocks are their investment, which is related more to their financial freedom and also their retirement investment. This information is very transparent because of mature US stock market, and for all the hedge funds whose assets under management is over 100 million, they need to file the 13F to SEC quarterly to show their position change. And all the form you can find SEC or some other website who has made tools to help you grab the information. So now comes to the key question. If you copy the successful investors, whether you can make money in your portfolio. So this comes to the backtest that this book did. So they have did a Buffett stock simulation as well as the real Berkshire Hathaway stock BRKA's performance, comparing with S&P 500. So we can see that from 1999 to 2014, around 15 years, the performance of Berkshire Hathaway A share has been significantly larger than the S&P 500, especially in the bear market between like 2008 to 2010. And when we look at the simulation of Berkshire's portfolio, which means we copy Berkshire's stock choices every time they release their new position change, we surprisingly can find out from 2009 to 2014 the performance is even better. So that shows interesting implication that if you are copying Buffett's choices between the time 2019 to 2014, probably your performance is even better. Of course, there's also some pros and cons whether we should copy the 13F of specific hedge fund or some institutional investors you think can make a great performance. The first pros is the lower fees. Instead of giving your money to the professional fund managers, you can manage your fund by yourself in your brokerage account. But you can also take advantage of their wisdom by looking at the 13F on the SEC website to see their position change and learn and take action from that, and learning from their trading strategies. The second advantage is liquidity. So when you are giving the money to some fund managers, you may have some period on lock, like monthly, quarterly, yearly lockup at the hedge fund that you cannot access to. But if you manage your fund in your own brokerage account, you can make the changes from time to time. And if suddenly you need some fund, you can pull out immediately. And the third pros is the transparency. Like you can control your portfolio 100% and you don't need to access to your fund manager if you have any questions or if you want to buy and sell specific stocks. However, copying 13F from the hedge fund managers may have some disadvantages. The first one is that if you're doing short selling, the 13F doesn't include short selling positions and only shows the long positions, so that it may not give you much advice if you want to short selling specific stocks. And the second disadvantage is lack of experience in portfolio management. Other than picking up the right stock, allocate your portfolio is important to control the risk as well as maximum the return. So without the help of professional fund manager, you need to figure out asset allocation by yourself. So after talking about whether the strategy of hacking the hedge fund manager would work or not, and also some cons and pros about this strategy, so now I'd like to share a website you can check their 13F very easily. So instead of going to SEC's website and scan through a lot of information, you can go to the website Webull and look for specific fund you're interested. So for example, I'm very interested in Pershing Square's holdings, and I just type into the name and found their latest portfolio change, like in the recent quarter ending June 30th. Pershing Square has increased QSR position 8% in their portfolio, as well as enclosed loss position about 6% in their portfolio. And I can also see their top sales, and moreover, I can also see the 13F hold summary. I can see that their biggest holding is low stock, which accounts for 22%, and their second stock holding is QSR stock, which accounts for around 17%. And their recent purchase of QSR almost doubled their position in QSR industry. So we can see that Bill Ackman seems to really like the food industry, and I was totally agree with them because I think food is one of the necessity or must for human beings, and a lot of the restaurants under QSR like Popeyes, Burger King, and Tim Hortons, they are temporarily shut down because of the coronavirus, and they will have a comeback after the reopen of the economy. So that implies that it's maybe a good time to buy the QSR stock, and it's also become one of my investment idea for next week. So that's all about my takeaways from the book Invest with the House, and how to take advantage of those institutional investors as they have more information that we can imply from their actions. Hope that would be helpful to you guys, and I will see you very soon. Bye!